Welcome to Armand Academy. Like and subscribe for more content and drop your doubts in the comments. Share with your friends and classmates. For private tuition in these subjects across all boards and universities, contact me here or the link in the description. Let's get started. In order to pass journal entries, what you need to know are the golden rules. The golden rules for accounting. All right. And we classify all accounts into three types: real, nominal, and personal. Real accounts are those accounts that deal with assets, comprise assets. Okay, and the rule is debit what comes in and credit what goes out. Okay, so when we talk about assets, examples can include, examples can include land and building, land and building, plant and machinery, plant and machinery. You can think of your cash, cash bank balance. Okay, so we would include the cash account, bank account. Think of investment, think of furniture. Okay, so all of these would be different accounts under the real account. All right, so it would be land and building account, plant and machinery account, cash account, bank account, investment account, furniture account. All right, now that we are done with the real account, we will look at the nominal account. And what comes under the nominal account is made very clear by the rule for the nominal account. The rule for the nominal account is debit all expenses and losses, debit all expenses and losses, credit, credit all incomes, incomes and incomes and gains. All right. Now, then ask yourself, what are examples of expenses? When we think about expenses, when you're running a business, think of rent. Obviously, it'll be rent paid because it is expenses. Similarly, we have incomes. Okay, so if you are running a business and you've got extra property lying around, you are paying rent for the property that you're using that belongs to someone else, but you will receive rent for the property that you rent out. So rent received is an income, rent paid is an expense. Similarly, interest paid is an expense, debit all expenses and losses. Okay, but rent, interest received, interest received, interest received will be a income. All right. But apart from what we would call these indirect incomes, we can also think about dividend received. Okay, if your company, yes, you're paying a dividend, that would be dividend paid. All right. So dividend received, rent received, income received, commission received, all of these would be incomes. But under expenses, think of normal business expenses. You're going to be paying salary. You're going to be paying wages. Okay, so maybe salary or salaries, wages. Okay, what else would you be? Okay, you can think about power and fuel, power and fuel. You can think about depreciation. All of these would be expenses. But when we think about losses, all right, when we think about losses, we mean losses that occur because of fire, because of theft. And all these accounts which I'm mentioning to you over here are just examples. There can be unlimited account names across all three types of accounts: real, nominal, and personal. Okay. So think of loss by fire, loss by theft. Okay, when we think about also when we are selling an asset at a loss, so we have what is called loss on loss on sale of asset. Similarly, when we think about gains, okay, the easiest one is gain on sale of asset. Okay, so again, that need not be the only example. That need not be the only example of what we would call again. Right? There could be many others as well. Right? It's not just for a sale of asset. It could be for forex, foreign exchange, where the rate of the currency changes in your favor. If you are an exporter, look at the rupee right now. You may have sold the goods when the price was 90 rupees. Today, uh, okay, today the price of a dollar is 97. So you are going to be earning that much more because of a change in the foreign exchange rate in your favor. Let's all of that would come under gains. Now, when we think about the personal account, when we think about the personal account, the rule is debit, debit the receiver, debit the receiver, and credit the giver. Okay, and as the name suggests, personal accounts are to do with people, to do with people. Okay, to do with people, to do with what we call entities. All right, so we have people, we have, okay, so under people, who all would be there? All right, we have debtors, we'll have debtors. Debtors are people who have to pay you. We have creditors. Creditors are people that your business has to pay. You have to pay. We have lenders. Okay, we have lenders. People are we have taken money from. Think of a bank, for example. We'll have borrowers, people who we have lent money to. All of these are individuals. Okay, they could be businesses as well. Okay, so if it is a company, for example, then it won't count as a natural person. Okay, so when we talk about people, we mean natural persons. Okay, but it could also be legal entities. Okay, legal entities like that. A person is also a legal entity. So we should say, strictly speaking, artificial artificial legal entities means entities created by law. All right, all of this we study in business. Okay, all of this we study in business and corporate law. Anyway, so examples of these would be companies, cooperative societies, cooperative societies. You can think about clubs. Okay, you can think about the government itself. Right? The government at the end of the day is an artificial legal entity. Okay, there's no one person who's the government, it is an institution, multiple institutions. All right, so like that, I could actually argue that institutions themselves, educational, governmental, all of them will come under the category of artificial entities. Okay, and then we have what are called representative accounts. Representative accounts. Okay, so for example, if you are selling goods on credit, okay, so if you are selling goods on credit to someone, yes, that will be okay, Mr. Henry or Mr. Mohan, they have to pay you their debtors. But there will be other situations as well where you have used some or the other service, okay, and you are yet to pay. Okay, electricity bill is still pending, and that would be an outstanding expense, or what we call an outstanding liability. So who does it have to be paid to? It has to be paid to the electricity company, right? And the electricity company also is going to be treated as a personal account, right? And it would appear in the balance sheet, let's say on the liability side, as outstanding electricity, okay, or outstanding telephone. So we have outstanding liabilities. We have prepaid accounts where we may have made an advance payment for using a mobile phone connection. Think of a prepaid connection. So it is treated as an asset. Okay, and it would be shown as prepaid telephone expense. Okay, and that also is at the end of the day, you've given it to a business and it is going to be treated as a prepaid account. We're not going to mention the business's name. Okay. But the nature of the account, because we have prepaid someone, it will be under personal account. Similarly, in accounting, we follow something called the separate entity concept. And the separate entity concept tells us that the business and the businessman or woman are separate. That means what the business owner, entrepreneur, partner, whatever it is, okay, shareholder, have given the business, invested in the business. For the business, it is a liability and will appear in what is called the capital account. If it's a sole proprietorship or a partnership, any money that is taken out, okay, will be recorded in what is called the drawings account. So money invested is the capital account. Money withdrawn will be a drawings account. All right. And all of this, okay, all of this would be also part of the personal account. Okay. So personal account also includes the accounts of the owners. Owner in the case of a sole proprietorship, which is owned, managed, and controlled by one person. Owners in the case of partnership or shareholders. All right. And it is maintained under capital account and drawings. Fine. So I've explained each type of account. But if there was really something that I would like you to learn, memorize, please, and keep ready, would be the golden rules, okay, which I'm going to put again into a box. We have the real account, which is debit what comes in, credit what goes out. Okay, so this much. We have the nominal account. We have the nominal account, which is debit all expenses and losses and credit all incomes and gains. Right, and I'm purposely putting it into a separately colored box. Okay, separately colored box because I need you to memorize these golden rules. Real account, debit what comes in, credit what goes out. Nominal account, debit all expenses and losses, credit all incomes and gains. And finally, the personal account, where we debit the receiver and credit, okay, and credit the giver. Memorize these three golden rules. These three golden rules. And if you understand, if this clicks, you will understand accounting, not just in the 11th standard or 12th standard or CA foundation or CS or CMA or whichever course you're doing. Okay, you will understand this from the first time you learn accounting all the way till your master's degree, professional degree, wherever you are learning accounting. A lot of the adjustments, a lot of the standard journal entries, which you will learn later on, are based on these three golden rules. There are lots of chapters going forward where I've never really memorized formats and standard journal entries. I simply follow the golden rules and I'm able to solve the sums. Okay, so go ahead, memorize this, and be ready for the next set of videos. Any doubts, feel free to ask.